Hey guys, it's Shawn. Thanks for tuning in. I want to talk today about the extra risk to borrowing right now. There is definitely a changing environment as we look at how the economy is shifting. We may well be in a recession. Hasn't been officially announced by the government folks, but it seems like all indications are that we are in the midst of this, an economic downturn, a contraction that is, continuing and sustained. And because of that and other things that are going on right now, there is extra risk to borrowing right now. We're going to zoom in on that. We're going to talk about some of the risks to borrowing in general, some things that are starting to develop right now. And then I'm going to talk about something towards the end that is really underreported and is really a big piece of why borrowing has become even more risky than what people have reported. Because yes, we are in a downturn. Yes, people could lose their jobs. Yes, a lot of things are happening right now, but the nature and dynamic of what's happening in the macro economy and in the big players of the market is really pointing to the fact that there is extra risk in borrowing right now. As always, folks, we'll be talking about some legal issues, not legal advice. Consult your counsel. Also, not investment or financial advice. It's always risky to borrow money. Anytime you borrow money, of course, your lender is going to want to be repaid. Lenders are generally in the position of wanting repayment over all else. They're more concerned about getting the principal back, the amount you borrowed back, plus the interest. They're not really concerned about growth or how well your business or personal finances necessarily do. They're not invested in the upside generally with borrowing, right? Whether that house goes up in value or is flat in value, lender doesn't really care, right? They want the loan back so they can repay their depositors or repay the investors in the mortgage market, right? So for us that are borrowing, because of the nature of this, we are always, extending an IOU. We will pay you, right? We're putting claims on our future income and future assets when we borrow. So there's always a risk associated with it because we don't know what our future income is going to be. We don't know what our future assets are going to be. We're hoping they're going to grow. We're hoping they're going to do well. But there's a chance they won't, right? So there's always that risk. Anytime we borrow money, that our assets may not be performing the way we wish, right? So there's always that risk involved. Meanwhile, right now, today, as we record this video, asset values are under attack. Recently did a video on my other channel talking about the fact that, mortgages, people are starting to see the housing market top, which means, mortgages are going to be more risky because that house value may have peaked. And if the market continues to trend down on real estate values, you still owe the same mortgage. Same with cars, right? There's a lot of weird things happening in the car market right now. A lot of repos going on. Plus, new cars hasn't been a lot of them lately because of the chips. Well, the chips may show up. These new cars may show up on lots. We may suddenly have a glut of used cars coming back from all the repos, and people can't pay their loans. And then, meanwhile, the new cars maybe showing up on the dealer lots as well. So we may well be in a situation where there's a lot of cars for sale in the near future, and that's going to lower the car values. So same situation. House values may have peaked, at least in some markets. Car values may have peaked in some markets. That means anything you're borrowing against, your value of your underlying asset may be decreasing. So you can't just sell your way out of it by finding some buyer to take the thing off of you and pay off your loan. So that increases the risk of borrowing as well, because unless you have cash on the ready to buy yourself out, you may be in a situation where your loan balance is greater than the value of the assets it's attached to. Obviously, we're in a situation with income insecurity. Just saw a random message the other day from somebody who lost their job in a situation where 19% of the people at this particular employer lost their job. That is a massive slash, and we're starting to see those kind of slashes in the financial industry, in the tech industry. where will this start going into other industries, right? The restaurant industry has also been under attack. A lot of business owners are pulling out of there, right? But how many restaurant managers and others are getting caught up in the middle of that, working somewhere, and suddenly the business is closed, right? So all of this is pointing to a growing income insecurity. And of course, when you're borrowing money, you're pledging your future income. You're pledging your future assets. And if that income stops coming in, what do you do, right? Many people have been through this before in prior recessions. You commit to a mortgage or rent or whatever the case may be, and then your income stops coming in. Well, now you've got a problem, right? So we want to understand that. We also have growing bank issues, and this is starting to point towards, the big issue we're going to talk about in just a minute. But banks are not doing as well as they were doing, right? They're starting to see the mortgage originations are down. People are starting to have higher credit card balances, which may lead to future problems. So the banking industry is not seeing the same revenue streams. JP Morgan has been going around, their president's been talking about the fact that we have an economic hurricane coming. They're obviously going to be tightening their underwriting guidelines, not writing as much, to the extent that you're getting into a borrowing situation where you may want to borrow again in the future to help alleviate it, a refinance situation, or potentially moving from an asset now to an asset in the future. That's going to be difficult, right? There's a real risk. Can you refinance on good commercial terms, given how the market's shifting? And the fact that the banks are having issues is really pointing to a big thing that few people are talking about, which we're going to talk about now so that you're in the know. Faster foreclosures, right? In the financial downturn of 2007, 2008, 2009, a lot of properties, mortgages, real estate in particular, the foreclosures were slow. They took a long time to process. Banks learned their lesson. Right now, there was an interesting piece on Letho Law, and I'll put a link in the resources below this video. He's looking at the fact that he was looking at some auto loans, and part of the claim there is that the auto lender didn't foreclose fast enough, right? So generally when you have a foreclosure, the lender needs to get the asset sold off, maximize the value, minimize the loss to the borrower. Well, smart lawyers have started connecting the dots and saying if you don't foreclose fast in a down market, the asset may decrease in value. So are you, lender, fulfilling your duty? So that all points to the fact that if this aggressive work from the lawyers continues, what do people do to react? People generally adjust their business policies to minimize legal risk, right? That's why you see ladders with stickers on the side of them. That's why you see the crazy warnings. That's why you always see those wet floor signs in the supermarket or bathrooms of your favorite retailer, because everybody is reacting to minimize their legal risk. Well, if the word gets out to auto lenders, to banks that hold mortgages, etc., that you might get sued for not foreclosing quickly enough because some lawyer is going to claim that you didn't maximize the asset value and you increased the loss of the borrower, then people are going to be pushed economically to foreclose faster. And that is a real risk that we're seeing here that we didn't see last time. I didn't hear about those lawsuits during 2007 and 2009. They may have been out there, but they were not prominent. Now these articles are starting to come up again and again and again about these delayed foreclosures on autos. Will there be lawsuits over delayed foreclosures on mortgages? And will lenders want to be more aggressive? Not only does it also potentially benefit the borrower, meaning that the mortgage lender or auto lender won't get sued, also potentially it maximizes recovery, right? If we're going into this glut of autos that we talked about earlier in the video, and if we're going to a situation where home values are declining, which some people are saying is possible, then it may well be in the bank's interest to process foreclosures faster because they'll be selling at a higher price, because not all of the cases will they be able to get the money back out of the borrower. Usually they can get a deficiency judgment, go after the borrower if they sell the car or the house for less than the loan amount. But if that person's not available or bankrupt or judgment proof, then the bank ends up holding the bag. If you process your paperwork faster and get out of the situation faster, those deficiencies should be smaller, because the asset values, if they're declining, they'll be higher if you foreclose sooner than if you foreclose later, right? So are we going to see a new era of financial responsibility by these lenders, and will they foreclose faster? A lot of open questions here, folks. This is a really rapidly changing market, but I have to say my gut instinct is the risk of being a borrower now is higher than ever, because you don't know what a lender's going to react, right? You don't know how bad this is going to get, and we may see a situation where those loans don't just hurt you, but they hurt you quickly. So be careful. Minimize your leverage, as we've talked about on the other channel. Make sure that you don't get yourself overextended, because we're in a new era of risk. Folks, I'm Shawn McBride. Hope you're subscribed to the channel and rung the bell for notifications so we can bring you more great videos. And I hope you put a like on this video so more people see it. And I really want to join you in the comments. So what are your thoughts on this? What are you seeing? Join me in the comments below. I'll see you there.